Hello. So previously our session did not have sound. That video is going to be, I'm going to make it private, but yeah. So our previous session did not have sound. Let's hope this session has sound. I've checked on sound. I've made sure that this session has sound. So now let's get to it. As I wasn't talking about, this was the very last topic I was talking about. Today, this morning, our topic is on correlations between US 10-year and, so let's just get to it. US 10-year gold and Forex, okay? So you can use the information that I'm going to be giving you based on this information. You can use it to somehow you can use it to create your next forecast or your next decisions that you're planning to maybe take a trade. This could be the reasoning as to why you're taking a trade. So it's always important to make sure you've checked on your fundamental factors before taking any entries, okay? Technicals is essential, but also fundamentals is essential. So today we're going to be focusing on the US government bonds 10-year yield, okay? So as the very first thing I would like to say is that the US 10-year yield, the US 10-year usually has an inverse, okay? It has an inverse correlation with gold, okay? It has an inverse correlation with gold in normal circumstances, not just every day. In normal circumstances, the US 10-year has, okay? It has, let me just put this here. Okay, yeah, so as I was saying, on normal circumstances, the US 10-year has, okay, it has inverse correlation with XAU USD, okay? So that's an important thing to note. What do I mean by inverse? I mean that when the US 10-year is going up, like this is an example, when the US 10-year is going up, expect that gold is going down. Okay, when the US 10-year is going up, gold is going down, and when the US 10-year is going down, gold is going up. But it isn't just based on the US 10-year that is the only reason we're going to be basing on maybe taking gold to the upside. No, we need to also focus on the DXY. We'll also be checking up on the DXY to make sure it slightly aligns with with the notion that we're actually picturing, so that before we make our decisions, okay? Before we make our decisions. So this thesis right here is a basic scenario as to why I decided to tell you that gold, previously I told you that gold will keep dropping. Let me show you that entry before we even continue with that. So gold right there, okay? Gold. I had said previously, okay, let's go to the 4-hour time frame. It's more easier. Then we'll just go back to the daily time frame on the US 10-year. I'm just going to show you this on the 4-hour time frame, just to make it much quicker and much simpler before we continue with whatever we are doing, right? So this was what I had told you will happen. This is what I had told you will happen. This is what I had told you will happen this is the scenario that I told you will happen on XAU USD, and you can see already we already managed to achieve 500 and it was 560 550 550 pips from this move. It was 500 and something pips from this move. Okay, let's just calculate it to be sure. I can't remember clearly. Let's just calculate it. Okay, this was the entry, because I had 2 entries right there. I had in fact 3 entries around that zone. Okay, there we go. That was my main closure. Yeah, 528 pips. Okay, 529 pips, around there. 529 pips. I had told you this, but my thesis was not only based on gold is dropping down. It's just showing signs of the market maybe going down or something of the sort. No. Okay, no, maybe we were trading under the POC. Those were confluences that I was using. We were trading under the POC. We had failed to break above it and trade above it. Each time the market tried to maybe trade above the POC, we saw it coming back down. Each time it tried to trade above it, we saw it coming down. Each time it broke above, it just rejected and pushed down. So that was one confluence that told me that this market is just going to keep dropping down. So when we had this, so I just knew that once the market touches into this zone, I'm getting in. We're selling this market. That's the thing that I did. So my initial entry was just a tap into this line, and I had my first entry. My first entry was around somewhere around here. Okay, my first entry was around 50. Yeah, it was 50. It was at 52. Was it? Yeah, 52. My first entry was at 26.52. But yeah, so all in all, I want us to go into the US 10-year yield, okay? Let's go into the US 10-year yield. I want you to learn how you can use this information. You can use this information to actually enhance your trading capabilities, okay? How you can use this information to enhance your trading capabilities and maybe grow your trading skills. Okay, so let's go back. Let's go. I don't want to use the 4-hour time frame on this. I don't want to use the 4-hour time frame on this, because that is gold we're trading with. Okay, we're trading it with gold, and if you use the 4-hour time frame, you might find yourself stuck, right? So unless I'm looking for very short-term entries, maybe less than 100 pips. And for me, I look for 100 pips and above. Okay, I usually look for 100 pips and above when I take a trade. So either way, basically, we can take note of the information that we can gather. Okay, let's just take note of information that we can gather from this scenario that we're depicting here. Okay, the US 10-year has been steadily on an uptrend. You can see this. Okay, it has been steadily on an uptrend right here. Okay, you can see that it has been steadily on an uptrend, but something happened. Okay, something happened. We've been on an uptrend for quite a while, okay? For a very long time, the market has been on an uptrend, okay? Not a downtrend, on an uptrend. But now here's something that happened. We saw this market, while it came to create this low, okay, this lower high, right? It came to create this lower high. It was supposed to now come and create a break of structure, right? We were supposed to see a break of structure. So let's just mark that out. We were supposed to see a break of structure right here. We were supposed to see a break of structure and then a continuation to the upside. But what happened? The market, instead of doing that, it created a lower high. That was one thing that you take note of. It created a lower high. And not only that, okay, not only that, we eventually came and saw the market taking out that low. So in short, it created a change of character. Okay, let me just write it down. Okay, so we saw maybe I'm not sure if it's a very long-term change of character or what, but this is a solid change of character because this was a low and now the market is trending towards the downside. So what are the expectations? That's why we've seen gold has been pumping and pumping and pumping. Even the days when you see gold is gaining, even the days when you see the DXY is gaining some substantial strength, the gold keeps just pumping. People are wondering why. It's because the 10-year yield wasn't actually bullish. So even if the DXY is bullish, when the 10-year yield is bullish and the dollar, when the 10-year yield is bullish, the dollar will be bullish and it will be stronger. Okay, it will be strong. Okay, it will be the strong bullish. But if it's just the 10-year yield is dropping and the 10-year yield is dropping, expect the US dollar to also keep dropping. So now we're going to be studying the information that we can gather from this. So now we understand that this market has been on a downtrend, right? The 10-year yield has been on a downtrend. So how do we use this information? How do we use this information to actually capitalize on this retracement that we are trading right now? This retracement that we're trading. Currently, we're trading a retracement on gold. We're looking to at least drive it to at least 2650, and then we push it to the upside, right? So why are we doing that? Okay, why are we doing that? Well, I'm going to take you to this point right here, this area right here. From this day, we started seeing some small volume. It didn't have volume. Okay, this was no volume. This was no volume to tell us that the US 10-year is gaining strength. No, this was zero volume. This was zero volume. This is just some very small wicks. But I want you to take note of the second. From the second, okay. Take note from the second onwards. Look at the volume that started forming, okay? Look at the volume that started forming. This was some very strong volume that came and eventually broke out of this fair value gap. And then, not only that, we came and broke out of another fair value gap right here, okay? We broke out of another fair value. This is a candle. This is a candle that just opened and closed right there. I think this was a Sunday. Or Monday candle, yeah, but you can see, so this is an entire fair value gap. This is a gap, okay? There's a gap right here. This is a fair value gap. So this market came with strength and it broke out of this resistance, came and gave us some very substantial strength, breaking out of this zone. What do we expect? We expect that the US 10, now we can see volume coming in. We can see volume coming in from the second. I want you to take note of that. The volume started coming in from the second, okay? From the second. And as I told you, the US dollar, the US 10-year yield and XAU USD usually have an inverse correlation. Now I want us to go to the second, okay? I want us to go to the second, and we'll also check on these dates. I will show you that as long as you don't see volume, do not rely on this, okay, as a maybe entry confirmation, because we do not have enough volume right here. Volume started forming right here. We can see volume in these candles, but we cannot see volume in these candles, okay? In fact, these candles look like they were just forming a short-term retracement and about to continue to the downside until this happened. Now I want us to now focus on that information that we've gathered from there. Okay, let's focus on that information. What was that zone that actually prompted this market to go to the upside? There is an order block, okay, a daily order block right here. Okay, there's this daily order block that the market reacted to. That the market, it's not a very strong order block, but it's an order block that the market reacted to push it to the upside. Where are we looking to drive this market to? Okay, that's another question. Where are we looking to drive it to? We're looking to take it to at least this, okay, at least this fair value gap that is right here. Okay, take it to at least this fair value gap that is right here and continue to the downside, because gold is heading to the upside, unless we see maybe a good presidential candidate win. Then we are going to see maybe the US 10-year continue to the upside. But for now, it has either shifted its movement, and we can see that now it's planning to go to the downside. So we are creating higher lows and higher highs, higher lows and higher highs. This is a change of character, but within this change of character, we can see, okay, this is a change of character. Now the market wants to retrace into an order block or a fair value gap that is within this trend line right here, and then now we continue to the downside, creating another break of structure. Just how market usually moves, creates break of structure, it creates a new break of structure, creating a lower low, and then it'll come and create a lower high. So we'll be taking note of this information. Now, as I said, I want us to take note from the 2nd, okay, from the 2nd of October 2024. Now let's go to gold from the 2nd of October 2024 to date. I want us to see what has been happening, because that is where the volume started. So that is where we are going to be taking note of. Now let's go to the 2nd, okay. It's the 2nd right here. Where is the 2nd? Where is the 2nd? This is the 2nd. From the 2nd, you will notice that each and every day the candles started becoming bearish. Each and every single day from the 2nd, the candlesticks started becoming bearish. I'm not going to regard this or this or this, because during that period we weren't having any volume, not enough volume to say this market is bullish, okay? But volume started on the 2nd. Now I want us to take note of the 2nd. From the 2nd, we started seeing the market dropping, creating red candles each and every single day, bearish candles. So what do we expect? We expect that the market will keep dropping down. Okay, we expect that the market will keep dropping down. Inverse, okay, inverse or negative correlation. They usually have that. So the very first thing you need to make sure, you just don't say, oh, this market and this market correlate. No, you need to be sure of the volume. Check the volume in the candles. Like you can see the volume in gold, those are strong candles, okay? But when you're seeing candles like this, these very small candles, those are not candles that have a lot of information. Those are just too much noise in the market. So we focus on the actual, whatever is actually happening, and we can see this market is creating we're going to keep dropping. And I said that this market is going to go up to 2550. Okay, we're going to see it up to 2550. Prepare for that. Okay, because the US 10-year is strong. The US 10-year yield is strong. But I want us to now go and check on the DXY. I want us to check on the DXY and see the difference. Okay, I want us to check on the DXY and see the difference of why you cannot solely rely on the DXY to tell you that you need to buy or you need to sell. Now look at this, because you can even point out that there's some days that this market, that the DXY has been there's some days that the DXY has been really slow. Okay, there's some days that the DXY has been really slow. Let's say it's showing bullish momentum. We were seeing maybe the DXY forming bullish momentum, but what was happening? The DXY is forming bullish momentum, but gold is also bullish. It's because the US 10-year was bearish. Okay, until we got the volume to show the market is bullish. Now I want us to look at this from the 2nd. Where is the 2nd? You can take note of this. You can take note of from this day, from the 30th. The DXY will gain strength from the 30th, but if you check on gold from the 30th, the gold was not bearish. Okay, gold was not bearish from the 30th. Gold was bearish from the 2nd. Okay, gold was bearish from the 2nd, right here. And that is where you can see the volume started coming in. Look at the second. Look at the second. We started seeing volume coming in, but we couldn't rely on gold. We couldn't rely on DXY to tell us that we're going to be selling gold because the DXY is going to be bullish. How could we know that the DXY is bullish yet it hadn't broken this strong resistance point? Okay, we hadn't seen it breaking this point. So unless it broke out of this point, then and only then would we say that the DXY is bullish. Okay, that then only, because sometimes the market comes into that point and then we see a rejection, an instant rejection to the downside. But what happened? Okay, what happened? The DXY, once it broke out, it kept breaking out because the 10-year yield was strong from the 2nd. Okay, that is when this momentum started, from the 2nd. The US 10-year yield gained strength, so the dollar gained strength. When the US 10-year yield is strong, expect that the dollar is also going to be strong. When they are both strong, whatever asset you're trading against them, but you need to ensure that that asset is weak. Okay, you need to make sure that that asset is weaker on the long term or on the short term. It needs to be weaker than the US dollar. Okay, so let's say you're trading. Let's take an example. Let's take an example of a currency pair, right? Let's say we're trading GBP USD, right? Let's say we're trading GBP USD. You're going to see that it's falling. You're going to see that GBP USD is falling. Negative 0.0047, right? It's falling. Why is it falling? Okay, if it's falling, why is it falling? Those are questions we need to ask ourselves, because it's not just falling, right? We're going to come right here and check on the US 10-year. We checked on the US 10-year. The US 10-year is bullish, right? The US 10-year is bullish. At the same time that the US 10-year is bullish, look at the UK 10-year. Look at it. It's bearish at a negative 0.001. Okay, so this information tells us, in fact, if we check it in percentage form, it's at negative 0.02, and the US 10-year is at 0.00, and it's slightly going to keep increasing. So that tells us that we are going to potentially see assets like GBP USD selling. Okay, we're going to see assets like GBP USD continuously selling. Okay, for in maybe short term or long term position, we're going to see GBP USD selling. Okay, and the same thing, you can take note of it right here. Okay, you can take note of it right here. It dropped by negative 0.04. Why? Because the US 10-year is actually stronger than the UK 10-year. Okay, than the UK 10-year yield. So you can use the US 10-year yield in correlation with, you can use the US 10-year yield in correlation with your assets to actually create a daily bias. Okay, you can use it to create a daily bias. Let's say you're trading an asset. Let's say the US 10-year is really strong. Let's say it's really strong and it actually reaches maybe somewhere around 1.12. Then you can expect an asset like gold is going to keep dropping. Okay? Because as I've told you, gold and the US 10-year usually have an inverse correlation. Okay? They usually have an inverse correlation. But you need to make sure that you just don't sell. You use this to give you a daily bias, that on this day, I'm seeing volume that is coming in on the US 10-year. There's volume that is coming in, and maybe on the DXY, I'm also seeing volume that is coming in. Okay, like let's just take an example of what I'm seeing right here. Let's take an example of what I'm seeing right here. I'm seeing a very strong bullish momentum, then a rest on the DXY. The DXY rested, then continuation. So we're going to call this a corrective move. We're going to call this a short-term corrective move, then a continuation. So where are we going to expect it? We're getting a closure, we're about to get a daily closure above this zone. If we do get a daily closure above this zone, we can expect it to touch this zone. Okay? We can expect it to come into this zone right here. So those are our expectations. Those are things that we're going to have in mind. Okay? this zone is a very strong zone that I had marked out. So I'm going to expect it to come into this zone. So for the period that the dollar is actually going to be coming into this zone, I expect also the US 10-year is also going to be pushing to the upside into the trend line that I had shown you, right? It's going to be pushing into the upside into the trend line that I had shown you before we see maybe some downward momentum, coming in. So that tells us, because the US 10-year has been on an upward trend, but for now we've seen a change of character, so it's possible that we're going to see it continue going to the downside. And also the dollar, it's possible we're going to keep seeing it going to the downside unless a good president wins. Maybe Trump wins. If Trump wins, and Trump is actually pro-dollar, so if he wins and maybe real estate goes up, real estate sales go up after the election, because that is what usually happens. So real estate goes up after the elections, and then the purchasing of real estates goes up after the elections, and then the US dollar gains strength, the US yield, 10-year yield gains strength. Then that means that we're going to at least see now some beautiful retracements, or maybe a very long consolidation, slightly long consolidation for the remainder of the quarter of the year. We're going to maybe see a consolidation in gold, or maybe a drop. Okay, but I cannot assure you of anything unless we are through with elections. Okay, after elections, then we might see, when we get a leader who we know this leader is strong or something of the sort. So based on this information, you can use this information that I'm giving you right now to assist you in getting your daily bias. Okay, it can assist you to get your daily bias, but ensure you use volume. Okay, ensure you use volume. Ensure you have PD arrays, 2 PD arrays or 3 PD arrays. Don't have a lot of PD arrays. Do not have a lot of PD arrays. Just, in fact, have just 2 PD arrays. For me, I usually have 2 PD arrays, but you can have 3. Okay, a breaker block. You can have a breaker block, a fair value gap, and an order block. Okay, those are enough. 3 PD arrays are enough. But for me, I usually use 2 PD arrays. I only use order blocks and fair value gaps as my PD arrays. Sometimes I use breaker blocks, but yeah. As I was saying, so make sure you have confirmation before you make that entry, before you decide to make that entry. So here's confirmation that you can use. So I want us to take this example. On the second, we come to the second. On the second, we notice that gold, that the US dollar is gaining strength. We've broken past this strong resistance that is right here. So the dollar has gained strength on the second. Okay, so our thesis, we're going to start creating it on the third, right? We're going to start creating our thesis on the third. Now we come into the DXY. We already know the DXY is going to be bullish for a short period of time, right? The DXY is going to be bullish. That we take note of that information. Now we come to the US 10-year. Okay, we come to the US 10-year. Let me just, is it right here? Okay, we come to the US 10-year on the second. Okay, we are using actually the US 10-year to tell us the second was a bullish, where we gained the bullish momentum, right? We're gaining bullish momentum from the second. From the second is where we're gaining bullish momentum. And the third is where the entry confirmation started, right? We can see that at the same time on the third, that we broke out of a very strong resistance point on the DXY. We also broke out right here of this point right here. So this tells us that we'll see a further continuation, right? And volume is coming in. So on the third, we start seeing volume coming in. Okay, we start seeing some volume coming in on the third, on the US 10-year. So what are we going to do? We come to gold. Okay, we come to our gold entries. Where's gold at? Gold. Okay, so we come to gold, and then we break it down. Okay, we break it down. Let's now go to the 4-hour time frame. Okay, we already know that on the third, our bias is bearish on gold. As I've told you, our bias is going to be bearish on gold. So we come to the 4-hour time frame. As I've told you, for me, I mainly base my thesis on the 4-hour time frame, and then after that I might start now breaking it down to maybe lower time frames. But I usually use very high time frames. So let's say we've added our volume profile, okay, because we use that also. We use PD arrays, we use everything that we can. So when was the third? We want to take note of the third. Okay, on the 30th, the XY was strong. Then we saw this strength coming in on the first, second begins right here. So this was the second. What can we tell from this zone on the second? What can we tell from this area right here? Okay, we can say that this right here, we can use this as an order block right here. They can use this as an order block. Say this is what sent this market to the downside, right? So we can use this as an order block. But is it really strong? No, it's not really strong. It doesn't meet my likeliness, okay? But what I can take note of isn't that. What I can take note of is this. The volume profile. Where are we situated at? Okay, where are we situated at? We're situated at the POC. Okay, we're situated at the point of control. And we do not see for 1 single second that this market actually breaks out of this zone. Okay, we do not see the market breaking out of this zone. So what happens? Okay, and there's only this period that we've seen it break out, but it still came back down. Every single time we see a breakout, it still comes back down, right? So now we know that the POC is really strong. Where does the POC want to send this market? We expect that the POC wants to send this market to the downside, right? To the value area low, right? We expect he wants to send this market to the value area low. And there's usually those two zones that I usually tell you in. There's usually those two zones that I usually tell you in the volume profile. Okay, there's this zone, there's this box right here that you always see. This box that creates right there. So when both the value area low and the value area high have been tapped, what you need to look for is that blue zone. Has the market touched that blue zone? We can see that the market actually touched that blue zone when it created this high, right? So where are we going to expect it? The next time we're going to expect it is below this, okay? We're going to expect it to come below the value area low. And if it comes below the value area low, where are we going to expect it? We're going to expect it to come into the blue zone. So where is the blue zone right here? It's around 2550, right? It's around 2550. So that's where we are going to expect gold at, okay? So we keep that in mind. And now we start looking for entries. Our entry is going to be from this point of control right here. Our entry is going to be from this point of control. But for one thing we need to take note of, we actually took these entries. We actually sold gold during this period. We actually sold gold, but we weren't holding it for a long time. This was the long-term entry. This was not the long-term entry. But do you know why we did not take this as a long-term entry? Because we had NFP during this period. Okay, we had NFP during this period. So the market was actually dangling around and playing with our minds. So you aren't really sure of what might happen. Okay, it went down, it came back up, and then it went down. So all this information, we can tell from this trend line that it is respecting this trend line. The market is respecting this trend line. So this trend line is actually really strong. So what do we expect? We can expect that this market is going to break down. Okay, but there was this strong resistance point that was right here. So we were seeing which zone is it that might be strong. Okay, as for me, I told you the POC and this zone right here has been tapped. I'm going to look for the zone lower than that. So once we took this, I was just seeking first take profit, second take profit. My runner is still running. I'm waiting for this as my third take profit, and that is where I'm going to wait for my buy entry at 2550, and then we're going to drive it to the upside up to 2700, even 3000. So that is how you correlate the market. You can correlate US 10-year with gold, with the DXY, And you can even use it to trade Forex, use it to trade the GBP, you can use it to trade GBP USD, you can even use it to trade Euro USD right here. Okay, you can see there's some substantial strength in the Euro. Okay, so what are we going to do if we see Euro has some substantial strength? For me, Euro USD, I am not. I saw a reversal pattern forming. I saw a reversal pattern forming, but I wasn't. I wasn't going to be. I wasn't going to put it all in mind. Like, what I'm going to do, what I'm waiting for is a daily closure below this zone. Okay, I'm waiting for a daily closure below this zone. No 4 hour, a daily closure below this zone. Once I get a daily closure below this zone, I'm going to wait for retracement in with one candle body, the candle wick. When I get a retracement, or if I see some massive strength, then I'm going to use that strength to drive it to the downside. So this is my expectation on Euro USD. I posted the chart on the daily. I posted the chart on the not daily. I posted the chart on my Instagram. For those who are not who haven't seen it, just go to my Instagram. You're going to see it. Yeah, and the information is there. So for me, Euro USD, I'm waiting. I will only take a sell on Euro USD after I see a closure below this zone. If I do not see a closure below this, a daily closure below this zone, if I do not see a daily closure below this zone, I'd rather buy Euro USD. I'd rather wait and see the reaction right here. If I get maybe a double bottom, I drive it to the upside. If it closes above this zone, then I'm driving it to the upside. Okay, if we get a closure above this zone, then you can expect it's going to go up. So there's just two ways you can see it. It might come to this zone and drive it to the upside, but we are relying solely on the daily time frame to make our thesis. Okay, we need closures of the daily time frame to make our thesis. So yeah, you can use that information and use the correlations to actually help you make some. You can use it to get your daily bias. Okay, you can use it to get your daily bias and make some money. Okay, have a good trading day. Today is Thursday, tomorrow is Friday. Let's check on the news. Let's check on the news before trading economics. Okay, trading economics. Let's check on the news. Okay, we can see I was trading today. I'm trading today. Currently, the trades that I'm running, I'm only running 2 trades. No, 3 trades right now. Euro JPY. I'm running Euro JPY, but just a runner. I'm running gold, a runner, and I'm running Nasdaq. Nasdaq has been bullish, as you can see. Nasdaq is bullish. We had a beautiful entry. I was targeting 530 pips. For those who did not take the entry with me, here it is. US Tech. Is it at IC Markets? I was using IC Markets, right? Okay. Yeah, this is my target. I'm targeting up here. But for you guys, I'd rather you wait. I told you to close at 190 pips. So I'm going to, I would wait for, I gave you the reasoning in the previous video as to why I told you guys to close, but to wait for a break above this zone. Then if we get maybe a consolidation during London session, New York session, we're going to buy it up to this zone. Okay, so just keep that in mind, and then we're going to sell. After this period, we're going to sell to maybe sell, because we're going to get now the break of structure. So we're going to sell below the break of structure, maybe into this order block, and then we buy it continuously to the upside. Or what we might do is we might sell, we might let it just sell on its own, and then we buy, okay, from discount area. Yeah, so that's with Nasdaq. I was now checking on trading economics to see Yeah, so Nasdaq is up, US 30 is up. What else, what else? Okay, those are the only indices that I trade. Okay, those are the only indices that I trade. Okay, so let's go to economic calendar. Let's go to the economic calendar. Okay, economic calendar. So I've given you my thesis on Euro USD. It's on the daily time frame that we're going to be waiting for that closure. So our entry might be either tomorrow or next week. I want to see the news that we have today. Okay. Okay, we have mortgage rates at 2. Today is Wednesday, not Wednesday. Thursday. Where's Thursday? Right here. So yeah, today we have CPI. Today we have CPI. Signal will be sent out. Signals will be sent out. As I said, gold is still going to go down. The US dollar is really strong. So expect the US dollar to keep gaining more strength. So expect gold at 25.50, 25.48 in fact. Expect it around there. Yeah. Okay. I already said it. So just patiently wait and see it. We're gonna see it drop. We're gonna see the US dollar gain strength this week. So CPI sell XAU USD. Okay, yeah, and then we'll continue buying Nasdaq maybe up to here, or we'll see. I'll Nasdaq, I might share the signal, I might not share the signal, because I do not like the structure that is right here. Okay, I do not like the structure that is right here, because for me this didn't come into it didn't come and create. I gave you the reasoning in the other video why I didn't like this structure right here. So yeah, I hope you have a good trading day today, and see you